If your stop loss always gets hit, this is why.
Before taking any trade, we need to understand the higher time frame context. On the daily chart, the market is clearly in an uptrend, forming higher highs and higher lows. This is a strong bullish structure, and most traders would naturally look for buying opportunities. However, this is where things start to get interesting. At the top of the trend, we can see signs of potential distribution, where smart money may begin offloading positions. Price is no longer making strong impulsive moves, and momentum is starting to slow down. We also notice that the most recent high is failing to break significantly higher. At the same time, the market is approaching a critical level, the last higher low. This creates a key decision. Will the market continue the uptrend, or are we about to see a reversal? To answer that, we need to zoom into a lower time frame and see what smart money is really doing behind the scenes. Now let's zoom into the lower time frame to understand what's really happening behind the scenes. On the 30-minute chart, the market is clearly in a downtrend. We can see a sequence of lower highs and lower lows, confirming bearish structure. Eventually, price reaches a major lower low, where sell-side liquidity is resting. This is where most retail traders are selling, expecting the trend to continue. But instead of continuing lower, price starts to slow down. And then, something interesting happens. The market enters a range, creating what we call a manipulation phase. This is where smart money begins to accumulate positions, while trapping retail traders inside the range. Notice how price sweeps liquidity, both above and below the range, creating false signals and forcing traders into bad positions. After the manipulation phase, we start to see signs of strength. Price begins to push higher, suggesting a potential bullish reversal. So now the question is, where is the best place to enter this trade? For that, we need to refine our setup and move down to the 15-minute time frame. Now on the 15-minute time frame, we start to refine our setup. After the accumulation phase, price sweeps liquidity to the downside, taking out weak hands and triggering sell-side stops. This move creates a liquidity sweep, which is often the first sign of smart money involvement. Right after that, we see a strong bullish reaction. And this is where the market shifts character. Price breaks structure, forming a higher high, confirming a change of character, or xauusd. At this point, we are no longer looking for sells. We are now looking for buying opportunities. The next step is to wait for a pullback into a key area of interest. This is where we identify our precision entry. Using a fair value gap or an order block, this allows us to enter the trade with a tight stop loss and a clear risk to reward setup. Now let's drop down even lower to execute this trade with precision. Now on the lower time frame, we focus on executing the trade with precision. After the change of character, price pulls back into our area of interest. This is where we look for confirmation before entering the market. As price reacts from this zone, we enter the trade with the clearly defined stop loss below the invalidation level. This gives us a clean and controlled risk, while positioning ourselves for a strong upside move. From here, price begins to move in our favor, breaking structure and continuing with momentum. We can see a clear displacement, confirming strong buying pressure. As the market continues higher, our target is set at the previous high. where buy-side liquidity is resting. And eventually, price reaches our take profit. This is a complete smart money execution. Liquidity sweep, change of character, precision entry, and clean continuation. If you want to trade like this consistently, make sure to follow the channel and start thinking like smart money. The market doesn't reward prediction, it rewards understanding.